Bire, ktnnews.
Now, professional bodies are now calling for an overhaul of controversial clauses contained in the Finance Bill 2026, which they say if left will financially burden Kenyans. While appearing before the National Assembly Committee on Finance and Planning, the Institute of Certified Public Accountants of Kenya, ISPAC, and the Association of Kenya Bankers Association want proposals such as taxing money transfers and PayPal, and another calling for introduction of withholding tax on bank card transactions deleted from the bill. The committee chairperson, Kuria Kimani, however, shocked Kenyans following his revelations that the National Treasury's announcement of increase of taxable threshold from Kenyans earning 24,000 Kenya shillings to 30,000 shillings was missing in the bill. Alan Ochanda with the details.
The bill is proposing
the hearing of submissions from professional bodies on the Finance Bill 2026 before the National Assembly Committee on Finance and Planning have kicked off in earnest with radical proposals, ostensibly to ease Kenyans of the burden of taxes.
An individual.
The Institute of Certified Public Accountants, ISPAC, and the Kenya Bankers Association calling on the committee to reduce the pay-as-you-earn across all bands.
With the pay-as-you-earn reduction of 5% for all the tax bands, we are expanding our economy by 210 billion. We are creating the first year 36,000 new jobs, and this policy shift, it's not a loss because we are able to offset the perceived loss within the first 1 year.
The finance bill, as currently drafted, proposes to tax digital payment services including money transfers, payment processing settlement, merchant acquiring, and gateway or aggregation services. The Kenya Revenue Authority has also proposed to introduce a new tax on repossessed or auctioned items by banks.
We need to understand.
The Bankers Association warning this is punitive and will only shoot up loan rates.
If the proposal by KRA proceeds to charge VAT on these assets, on the sale of these assets, then the cost of credit will have to go up so that we're able to cover our costs in terms of lending.
The bodies are also opposed to a proposal to introduce excise duty on telephones, which will be paid by the user at the point of device activation, saying this may create significant uncertainty regarding reconciliation processes. The committee chair, Molo MP Kuria Kimani, however, dropped the shocker, deeming employed Kenyans' hopes.
Despite a proclamation made by the Minister for National Treasury on the minimum taxable pay, PYE, from I think it's around 24,000 to 30,000, that is not present in the bill. So we had an engagement with National Treasury why they pronounced themselves on the matter, involved the public on the matter, and it misses out on the bill.
This, as a lobby group, Christ and Okoa Uchumi, poked holes in the Finance Bill 2026, saying the proposed tax measures are extravagantly high for Kenyans to do business.
We are witnessing a terrifying contradiction. A government that tables an astronomical budget for the financial year 2026-2027 of Kenya shillings 4.8 trillion, brazenly exceeding its own budget policy statement ceiling by 69.3 billion.
The hearings continue tomorrow, Friday. Alan Ochanda, KTN.